So we have a ton to cover with Tesla stock and the possibility of where it may go, and in previous videos I highlighted this trading range between $152 per share and $216 per share, and I want to highlight some things that could possibly change whether or not we break above or below this range. Now when we look at the Nasdaq Index ETF QQQ, we see that the Nasdaq is still rallying up with this very strong bullish trend, and in the tech sector things are still very bullish, as we recently had Nvidia announce its earnings on Wednesday after the market closed, and we saw Nvidia stock rally up in the after hours above 25%, which is absolutely insane. However, while things are looking very good in the tech sector, we have to highlight a couple of things. Now yesterday in the Push and Profit private group, I mentioned how the FOMC meeting minutes were just released and how there was a big divergence of opinions amongst Fed officials, and there was actually many officials saying that additional rate hikes are needed and how they're still going to be very data dependent. Now Friday, May 26th is going to be a crucial day for the overall market, as we had the PCE numbers come out. Now a multitude of different times on the channel I highlighted how the PCE report is vital to pay attention to, because just like the CPI report, the PCE report is an inflationary gauge. However, what makes it more significant is that this is a report that the Fed officials actually look at to really see where inflation is at, and this is what they heavily base the decisions on. And so if we come in with hot numbers for the PCE index, well, this could really be bad for the overall market, because we may end up having Fed officials or the Federal Reserve actually hike up rates once again, even though everyone was led to believe that they were going to pause. This is the reason why I oftentimes say that you want to look at several different data points, because you want to have a holistic approach to the overall market, because there's so many different data points that could impact where the market will go. Now this morning in the Push and Profit private group, I also highlighted some trade ideas with some calls for AMD and puts for Amazon. And when we look at AMD and Amazon, we see that both trade ideas both really hit targets and absolutely killed it for the day. And so with that being said, if you guys want to be a part of the Push and Profit private group, where I go ahead and send out daily briefings and trade ideas, make sure to check out the first link in the description of this video below. I'll also comment it and pin it in the comment section below. This way you guys do not miss out on it, as there is absolutely a huge discount for Memorial Day, so definitely take advantage of that so you guys don't miss out on any daily briefings where I talk about what's going on in the overall market, so you guys could have a finer tuned, insight of what's going on. Now some other significant news that you want to pay attention to is the fact that credit agencies are warning of actually downgrading the credit worthiness of the United States. Now I know that sometimes when I cover these economic events, sometimes it's not easy to understand the impact that they have to the overall market, so I want to go ahead and make this very simple and clear. And so just like an individual has their own unique credit score, the United States has their own credit rating. And so what happens when an individual's credit score goes down? Well, that means that next time they take on debt, they may have to pay at a higher interest rate. And so if the United States, credit rating goes from a AAA to an A or a AA, well, what does that mean? That means that they would have to pay, foreign investors higher interest rates, and this would mean that bonds would have to pay a higher rate as well. And so what happens is when the United States Treasury issues out some new bonds, right, to really collect so that they could pay on their debt, well, guess what? There's going to be a massive amount of a liquidity drain, meaning that money that flows into the free market is going to go into these attractive bonds, right? Now, if you guys don't understand this, make sure to comment in the comment section below, and I'll go ahead and try to explain this in further details, but I want to move on in this video and really talk about Tesla. Now, going back to Tesla stock and looking at it from a technical aspect, a multitude of times on the channel I mentioned how we are at this level where there is a bunch of volume by price, and so there is a battle between the bid and the ask, and usually when we have a lot of volume relative to price, that's where we see consolidation, that's where we see supports and resistances met. And so if we have bad news, we may not be able to break above $216 and go back down to $152. Now real quick, if you guys are not subscribed to the channel, make sure to tap that subscribe button, because YouTube analytics tell me that over 90% of people that watch my videos are not subscribed. So make sure to subscribe so that you don't miss out on any future videos. Now, with that being said, I want to go ahead and cover my approach for Tesla stock, both from the perspective of a long-term investor and a short-term trader. Now, it's very obvious that it's difficult to predict the direction of a stock, especially if you're waiting on data to come out. No one has a crystal ball, and if someone tells you that they have a crystal ball, well, perhaps you should probably run away immediately, right? But what you can do is practice good risk management and actually have a plan. So my plan from a long-term investor perspective is if Tesla goes down to that bottom range, well, I'm simply going to add more capital into Tesla stock, right? Very easy, very simple. It's just dollar cost averaging. It's a simple, proven, and effective method. If Tesla goes down, I'll just go ahead and buy more Tesla. I'm holding this for a long time. However, when it comes to my trading account, right, which is, looking at things from a shorter time frame, I'm probably going to be waiting on this data to come out and see what is happening with inflation. Because again, if inflation actually, blips up again, well, there's going to be a lot of fear and panic in the market, right? And so we're going to have individuals and investors wanting to pull out from the market, and that's where you're going to have more volatility, and that's where we're probably going to see the tech sector start slowing down and stocks like Tesla kind of go back down to that bottom range, in which case I'll start, shorting Tesla or getting puts. Now, if the opposite happens, right? For example, let's say the PCE report comes out and it's actually really good and it shows that inflation is actually really working hard to actually just disintegrate, right? Well, in that case, I'm going to be very optimistic and bullish even from a shorter horizon. And so, perhaps I may buy more shares for a swing trade on the trading account, or I may buy calls, right? So I'm really just waiting on this data, right? I always say that you want to be, holistic and data driven and look at things from several different points. There's too many people that look at companies just from a fundamental aspect or only from a technical aspect. And I always say that you want to look at things from every single aspect that you can, right? There's alternative data that you can look at. There's macroeconomic data points that you want to look at. I mean, there's several things so that you could get the whole picture. I think it's very myopic to look at things from one perspective and form an analysis. You want to look at things, from every perspective that you can. And this is why I think Wall Street gets, stocks like Tesla wrong very often, right? And so that's why that, there's obviously a lot of value between price and value, right? There's a discrepancy between price and value, and that's how you could actually take advantage of an inefficient market, by being able to identify all the points together and form a better hypothesis. With that being said, guys, I don't want to make this video very long. Make sure to subscribe if you haven't done so already. Comment down below, and I'll watch you guys on this next video right over here. Take care, guys.